This is from the Business Insider on July 5th, a few days ago, and these three charts show inflation is finally right around the corner. And let's look at it over here. First, capacity utilization is high. Capacity utilization is something measured by the Fed to judge how much of the nation's factories and industrial facilities are being used. Historically, when capacity utilization is as high as it is now, the inflation rate has been much higher. And you could see this graph over here. Last time capacity utilization was 79%, CPI inflation was 3.5%. So 79%. Okay. And you have to also remember that the government, what year was that? No, just a few years ago. And if you want to also look at one thing, is that it's the CPI. So if you ignore the CPI and look at what's most likely the higher, or what's most likely the actual inflation, it's probably a few percentage points higher. Just going off the top of my head. But anyways, meanwhile, businesses are finding it harder and harder to fill job openings. According to new survey data from the National Federation of Independent Businesses, more and more companies are saying they can't find qualified applicants for job openings. Again, this is a function of the mass unemployed starting to disappear. I'm not sure about the last statement here, but it is true that companies are saying that they can't find qualified applicants. If you talk to recruiters, they're saying this, right? And I remember talking to a recruiter in 2010 and even earlier this year, excuse me, sometime in the fall of last year. And what they told me in 2009 was that 2006, 2007, there were more jobs out there, but businesses couldn't fill them because what ended up happening was these individuals weren't qualified. And I got the same response in 2013. And this is for individuals with degrees, whether it's a bachelor's, a master's degree, and then some sort of other qualification, whether it's a CPA. And I'm talking about my field, finance and accounting. This goes on, CFA, etc. But that's more on the financial analysis role. And if you want to go down here, and then naturally, because companies are having a harder time finding employees, they're indicating that salary increases are coming. Survey data shows a big increase in the number of businesses who say they plan to raise wages in the future. Bottom line, industrial slack is disappearing, companies are having a harder time finding workers, and they're planning on raising wages. Inflation, which has been dormant for years, is coming. Alright, and this is an article I think I saw today. It's July 6th. Here's another obvious sign of inflation coming. Saturday explained why it increasingly looks like the US is finally going to get some inflation after a long stretch of weak pricing growth and disinflation. Excess capacity or slack in the labor market and industrial system is diminishing as the economy kicks into higher gear. And this looks likely to lead to higher prices. Shortages equal price increases. Here's another big area to watch from the real estate world. The apartment market just had its best quarter since '01. Effective rent growth was 2.4% on a quarterly basis nationwide in April to June 2014. The highest quarter-to-quarter rate since the 2.9% of July to September of 2000. Occupancy in the second quarter of 2014 was 95%, the strongest since 95.6% of January to March 2001. But rent growth and occupancy exceeded expectations. Effective rent growth was soft in January and February, perhaps because of major winter storms and bitter cold temperatures that gripped much of the nation during the early part of the year. But March, April, and May was one of the strongest 3-month stretches we've seen in 19 years. And here's some charts showing some of these metrics. As you can see over here, when was this at 95%? like close to '06, or if you want to go to 2000, 2001, as the article said. So that's quite interesting to note. And here are my thoughts on this. First of all, Joe Wiesenthal always, you could say, hated on inflationistas, right? You could see his articles with a cynical take, attacking many libertarians and whatnot. And now he's turning ship and saying that inflation is coming. And last time I remember him turning the ship was on bitcoins. And he was really negative on bitcoins until I saw this article on bitcoins with Joe Wiesenthal. Let me grab it for a quick sec. Alright, so Joe Wiesenthal had this article, I'm changing my mind about Bitcoin. So he used to do articles about Bitcoins criticizing it left and right. And here's the deal. When he started to change his mind on Bitcoin, I was thinking to myself, you know what? The top is in, or the top is really close. And you could check my videos around that time. They're still up there, where I was talking about how the price of Bitcoin skyrocketed to a level that it shouldn't have that quickly. And I figured out that, you know what, it's going to come to a hard landing. And it has. That doesn't mean that it's going to go all the way down to zero. I'm just saying that it needs a correction, which we've gotten in Bitcoin. So what does this have to do with the inflation articles that I've talked about? Well, is Joe Wiesenthal, is he a contrary indicator? That's the question. Well, we all know that inflation is the increase in money supply and credit. And if you want to see higher inflation, you need to see the velocity of money pick up. And we will see the velocity of money pick up as the economy starts to grow. But we did have a negative GDP as of right now. But just because you have a negative GDP doesn't mean that you will necessarily have low inflation, or you're going to have deflation. We saw the 1970s where we had stagflation. So what am I trying to say here? Putting all the pieces to the puzzle. Well, I agree with Joe. Right now, we will see higher inflation. However, if you do see China blow up, well, that could interrupt the process. But eventually, with higher rates coming, better economy on the way, that would lead to, most likely, a repeat of the 1970s, or much worse. And I do want to show you one last graph before I go. Okay, now if you want to look at the year-to-date performance for commodities, we could see all in the green, or majority of these commodities are in the green. Coffee, highest increase, 55.2%. Lean hogs, 53.8%. Feeder cattle, 31%. Live cattle, 15%. Cocoa, 14%. Pork bellies, 13%. And sugar's up 8.5%. Orange juice, 7.4%. So we're definitely seeing inflation in commodities. So in the interim, higher inflation now, what's going to happen in a few years? Is it going to be a stagflationary cycle, or is it going to be a deflationary head fake? We shall see. We should see how the central bankers react to the situation, what goes on in emerging countries such as China. I'm still focusing on what's going on in China. If there's deleveraging going on, what's going to happen to the inflation in the United States? That's one question that I have. Anyways, guys, thanks for listening, and I'll talk to you later. Bye.